Have you ever wondered how money makes the world go round? Well, it's all about finance, the lifeblood of the global economy. Finance is the intricate system that facilitates the flow of money from savers to borrowers, from consumers to businesses, and from governments to their citizens. It's everywhere, permeating every facet of our lives, from the personal to the professional, from the mundane to the monumental. Let's take a moment to break down the enigma of finance into three key pillars: money, investment, and risk. First, money. It's the currency of life. It's the common denominator that allows us to exchange goods, services, and even ideas. But money isn't just about spending or saving. It's about the value we assign to our time, our skills, and our potential. Next, we have investment. Investment is the driving force that propels money into motion. It's the process of allocating resources, usually money, with the expectation of generating an income or profit. Investment breathes life into ideas, turning them into businesses, products, and services that shape our world. It's the bridge that connects today's savings with tomorrow's growth. And finally, risk. Risk is the ever-present shadow that follows every financial decision. It's the potential for loss that accompanies any investment. Risk reminds us that the future is uncertain, that the markets can be volatile, and that the rewards of investment are never guaranteed. Yet, it's this very element of uncertainty that creates opportunities for growth and innovation. At its core, finance is a balancing act. It's about managing the delicate interplay between money, investment, and risk. It's about making informed decisions that strike a balance between the potential for profit and the possibility of loss. It's about understanding the value of money, the power of investment, and the reality of risk. So finance is not just about money, it's about how we use it, where we invest it, and the risks we take. Now that you understand what finance is, let's delve into one of its key components: investment. Investment, in simple terms, is the process of allocating your resources today in the hopes that they'll grow and yield returns in the future. It might be as simple as planting a seed and waiting for a tree to grow, or as complex as buying shares in a multinational corporation. But why is investing important? Well, it's like a magic beanstalk, but instead of beans, you're planting your hard-earned money. And instead of a giant's castle, you're aiming for financial security and independence. Investing helps your money work for you, enabling you to reap the benefits of compound interest and continuous growth. Investing, however, is not a one-size-fits-all concept. It's a vast landscape, filled with a variety of opportunities, each with its own set of principles and requirements. For instance, investing in stocks means buying a piece of a company, becoming a part owner, and sharing in its successes and failures. On the other hand, bonds are like IOUs, where you lend your money to a government or corporation, and in return, they promise to pay you back with interest. Real estate is yet another type of investment where you acquire properties, either to earn rental income or to sell for a profit in the future. And then there are mutual funds, index funds, and a myriad of other options to explore. But remember, all investments come with risks and rewards. The key to successful investing lies in understanding these risks, diversifying your investments, and maintaining a long-term perspective. It's not about getting rich quick, but about growing your wealth steadily and surely. In the end, investing isn't just a financial strategy. It's a commitment to your future self. It's about setting up a safety net, building a nest egg, and creating a legacy that can outlive you. Investing is not just about making money, it's about growing your wealth over time. Investing can seem like a game of chance, but it's much more than that. It's a carefully calculated decision-making process, often influenced by risk. Risk, in the realm of investing, is a double-edged sword. It can be a formidable foe, but when managed well, can be a catalyst for greater returns. Risk is inherent in investing. It's the uncertainty that the returns expected from an investment will not materialize. Risk comes in various types: market risk, credit risk, liquidity risk, and operational risk, to name a few. Each type of risk requires a different strategy to manage. Market risk, for instance, is the risk that the entire market will decline, affecting the value of individual investments. Investors often mitigate this risk by diversifying their portfolio across different asset classes and geographical locations. Credit risk, on the other hand, is the risk that a borrower will default on their obligations. Investors can manage this risk by carefully scrutinizing the creditworthiness of the borrower. Liquidity risk is the risk that an investment cannot be sold without a substantial loss in value. This risk can be managed by investing in liquid assets or maintaining a cash reserve. Operational risk is the risk of loss resulting from inadequate or failed internal processes, people, and systems, or from external events. This risk can be managed by implementing robust internal controls and contingency plans. Now let's talk about the relationship between risk and reward. The two are inseparable. Higher potential returns on investment come with higher risk. This is known as the risk-reward trade-off. The goal for any investor is not to avoid risk, but to manage it and harness it to their advantage. To do this, investors need to understand their risk tolerance, the degree of uncertainty they are willing to take on to achieve their investment objectives. Once they know their risk tolerance, they can construct a portfolio that aligns with it, balancing the potential for higher returns with the level of risk they are comfortable taking on. While risk is a part of investing, a savvy investor knows how to manage risk to reap the rewards. They understand that risk and reward are two sides of the same coin, and that successful investing is all about managing the balance between the two. The investment market isn't just limited to your local area or country, it's a global playing field. The global investment market is an interconnected web of financial transactions, a vast and intricate ecosystem where money moves from one corner of the world to the other in a blink of an eye. It's like an enormous marketplace where buyers and sellers from all parts of the globe come together to trade. This market operates in a seamless fashion, transcending national borders and time zones. The sun never sets on the global investment market. When trading closes in New York, it is just beginning in Tokyo. This continuous operation allows investors from all around the world to participate, making the global market truly inclusive and diverse. So what makes global investing so appealing? Well, there are several advantages. Firstly, it offers investors a chance to diversify their portfolio. By investing in a variety of countries and regions, you're not putting all your eggs in one basket. This can help spread risk and potentially increase returns. Secondly, it opens up opportunities to invest in industries and sectors that may not be available in your home country. For instance, if your country lacks a robust technology sector, investing globally allows you to tap into tech giants in other parts of the world. Thirdly, the global market provides exposure to emerging markets. These are countries with rapidly growing economies which often present attractive investment opportunities. However, it's important to remember that with these opportunities also come challenges. The global market can be volatile and unpredictable. Factors such as political unrest, economic instability, and currency fluctuations can impact investment performance. Moreover, the complexity of the global market means that it requires a good understanding of international finance, an awareness of cultural nuances, and the ability to navigate regulatory differences. So, while the global investment market may seem like a daunting prospect, it is also an exciting one. With careful research, thorough planning, and a well-diversified portfolio, you can navigate this vast marketplace. The global market offers a world of opportunities for investors, but it also comes with its own set of challenges. So, where are we heading in the world of finance and investment? The future of finance and investment is an intriguing panorama, shaped by an array of factors. One of the most significant game changers is technology. The digital transformation is redefining how we manage, invest, and transfer money. With the rise of financial technologies, or fintech, banking and financial services have become more accessible, efficient, and personal. Artificial intelligence and machine learning are also making waves, enabling smarter investment decisions. They're capable of analyzing vast amounts of data to predict market trends and identify lucrative opportunities. The future of investment is not just digital, it's intelligent. And then there's the rise of cryptocurrencies. These digital currencies like Bitcoin and Ethereum have created a new asset class. They offer a decentralized, global, and digital form of money that's independent of central banks. Cryptocurrencies are reshaping the financial landscape, presenting novel ways to invest and transact. But remember, they also come with their own set of risks and volatility. Another pivotal trend is the shift towards sustainable investing. There's a growing recognition that investments should not only generate financial returns, but also contribute positively to society and the environment. This rising interest in ESG, environmental, social, and governance factors is driving a significant shift in the investment landscape. Investors are increasingly aligning their portfolios with their values and the broader goals of sustainable development. The future also holds the promise of increased financial inclusion. With the advent of mobile banking and microfinance, financial services are reaching corners of the world that were previously unbanked. This democratization of finance will empower more people to participate in the global economy and make their own investment decisions. The world of finance and investment is constantly evolving, and it's up to us to keep up with the changes and seize the opportunities that come our way. The future is exciting, unpredictable, and full of potential. So let's embrace it with an open mind and a keen eye on the horizon.